Welcome to Tactical Tuesday, your battlefield for strategy, risk control, and surgical entries. Whether you're a scalper or a sniper, today's intel is for you. This week we're breaking down what this gap is, why it matters, how to read it, and most importantly, how to trade it. Because here's the deal, the gap between yesterday's close and today's open, that's where smart money hides. Now before we get into it, make sure you smash the like button. It really does help out. And if you're new here, make sure you subscribe. Well, in a perfect world, price would move up and down consistently, creating this beautiful staircase effect. But in reality, price moves like a toddler on a sugar high. Sometimes it skips steps. Sometimes it goes backwards, and sometimes it just stands there refusing to move at all. Those unexpected pauses and jumps create these gaps. Let's use Tesla as an example. On one day, Tesla stock jumped almost 8% in one day. And that's when the price fills the gap, but it's not always upwards. Some just sit there taunting traders like, "Hey, come on, buy me," and the traders do. This keeps the price from filling the gap. Think of it like this. Each type is like a character in a story. They have different looks and behaviors, but they all fit together in the same narrative. They're not super flashy, but they happen all the time. Think of them like the background characters in the trading story. These gaps are like the quiet kid in the corner of the classroom. They're all different, but they all play a part in the grand story of price movement. They may not be the most flashy, but they've got a lot to offer if you know where to look. How can you use this knowledge to make profitable trades? It's totally gonna explode. Would you blindly jump into buying that stock? Probably not. You'd probably want to do a little research first, right? Same thing with gap trading. Don't just jump into trade because you see a gap. Take a step back, analyze the situation, and make a smart decision. Here are 3 key strategies to consider. First, pay attention to volume. It's about managing risk, reading the market, and making calculated decisions. Sure, gaps can be helpful, but they're not the holy grail of trading. Use them wisely and use them well. Changes in volume can indicate a change in interest or sentiment towards a stock. A sudden increase in volume along with a gap could suggest a breakout is imminent. Second, study the pre-market structure. Look at the pattern of price movement before the gap. Is it a strong uptrend or a steep decline? The pre-market structure can give you clues about the nature of the gap. Third, examine the first 15-minute candle after the gap. Does it break through the gap, confirming the gap play? Remember, not all gaps are created equal. Some are filled, others run. You don't want to chase every gap, wait for it to prove itself. An exhaustion gap appears when the market has been moving strongly in one direction for a while. Think of a runner who's been sprinting for a while. They're tired, they're catching their breath. That's what an exhaustion gap represents, a moment of pause before a potential change in direction. It's packed with real setups, risk zones, and when to walk away. Remember, the gap between yesterday's close and today's open, that's where smart money hides. Now, these gaps don't show up often, but when they do, they're a signal that the market may be reaching a turning point. They're important, but they're not the main attraction. Common gaps often appear due to regular order flow or minor news events. These gaps are usually small and they're great for day traders who love quick action. However, they're also quite unpredictable, so you need to be nimble and ready for anything. And once you know their story, you'll be better equipped to handle them. When the price falls suddenly, creating a gap, some traders are like, "Oh no, I missed it," and they stand pat. Others think, maybe I can catch a bounce back, and they buy, keeping the price from falling further. They're bigger, bolder, and more dramatic than common gaps. Imagine a rookie trying to break away from their team during a soccer game. That's the kind of energy we're talking about. Breakaway gaps often appear when there's a sudden surge in trading activity. It could be due to an unexpected earnings report, a last-minute regulatory approval, or a sudden shift in economic data. These gaps are not for the faint of heart. They're like the wild child of the gap family, unpredictable and full of surprises. But if you can handle the excitement, breakaway gaps can be your ticket to some serious profits. Just remember to keep your cool. Don't let the adrenaline get the best of you. Sometimes bad news can cause downward gaps. Take Netflix, for instance. In the past years, they announced some subscriber loss. To put it bluntly, people weren't too happy. The stock fell around 35% in one day, creating another gap. Now imagine being a trader who missed that drop. Some might think, man, I missed out, but then they post earnings reports and the stock tanks even more. Some traders take it as a sign to buy, causing the price to fill the gap. Why? Well, they announced some decent quarterly results. Nothing crazy, but enough to get people talking. This sudden jump created a gap. So if you were a trader who missed that jump, don't worry. There's a chance you can catch the wave on the next trading session. How? Well, by understanding the psychology of these gaps. And understanding not only what causes those gaps, but also how to read them is a superpower in the market. If you knew why prices jump and fall suddenly, wouldn't it be easier to figure out where it's headed next? Exactly, and that's what we're getting at. By understanding these gaps, you can anticipate price movements. It's like having an early warning system for price jumps and drops. Alright, so what exactly is a gap and why do we care? For me, it was when I realized that my coffee maker could actually make tea. Who knew anyway? This excitement got me thinking, maybe traders are much like me. Maybe their emotions leave imprints on the market, these things called gaps. And if we understand these gaps, we might be able to predict what they'll do next. First, let's talk about what causes gaps. Now, earnings reports, overnight news, and pre-market sentiment can all move a stock before the open. Think of it like your favorite coffee shop. In the morning, there's always a line. It's predictable. But on an ordinary day, some random dude might waltz in and order a double shot of espresso with extra whip. It's unexpected and it disrupts the flow. Price gaps are much like that random coffee order. They disrupt the flow of price movement. These gaps aren't just random though, they're emotional footprints left behind by other traders. And if you know how to read them, you can ride the aftershock. So let me ask you something. When was the last time you were so excited about something that you couldn't stop talking about it? Here's the deal. When a stock makes these large gaps upwards or downwards, it's usually because there's some big news or earnings report that came out. You see, the next session after the gap, many traders are like, dude, what happened yesterday? I missed it, let me buy now. And here's the kicker, not all gaps are filled. But why do you care about this, right? You're not a psychologist. Well, think about it this way. Okay, so now that we know why gaps happen, let's talk about the different types of gaps. Alright, so let's kick things off with common gaps. These are the everyday occurrences in the market. Next up, we have breakaway gaps. Now these are the moments that separate the boys from the men in the trading world. And finally, let's discuss exhaustion gaps. In a nutshell, common gaps are the regular guys. Breakaway gaps are the thrill seekers, and exhaustion gaps are the quiet thinkers of the trading world. Now, I know all this talk about gaps has got you pumped, but remember, trading isn't just about buying low and selling high. If you found this video helpful, give us like and subscribe. Keep your setup sharp and your stops tighter. Tactical Tuesday returns next week with more high-performance playbook insights. And that's a wrap for this week's Tactical Tuesday.